It's another trading day. Good morning, everyone. Welcome to 55 minutes of current and relevant business conversations. Let's do business. I'm Ini John Mekwa. And we start as usual from the oil space, where oil prices were largely flat on Thursday after settling at two-week lows in the previous session as pressure from weaker demand and a global oil glut continues to weigh on the market. Looking at the numbers at this time, we see that it's in the green for Brent, 0.03% at $63.54 a barrel. For WTI, that's the West Texas Intermediate Futures, that's also flat, $59.60. In the previous session, oil prices fell after the U.S. Energy Information Administration said that U.S. crude stocks rose by 5.2 million barrels to 421.2 million barrels last week. That's compared with expectations of 603,000 barrels rise. Oil prices fell a third straight month in October on fears of oversupply as the Organization of Petroleum Exporting Countries and its allies, that's OPEC Plus, they increased output while production from non-OPEC producers is also still growing. And now let's see how the market fared yesterday at the close of trade. A whole lot of money, more than ₦1 trillion, was shaved off the Nigerian Stock Exchange, a market that opened at 153,000 level, closed at barely 150,000. And conversations around the market is, of course, the increase of the capital gains tax from 10% to 30%, which is supposed to start in January, is driving investors away from the market. That's right. So investors are trying to hedge against that. They're taking their profit before January, because from January then 30% of your gains from I believe 100 million naira, you would have to give 30% of your gains as tax. And so investors are trying to leave the market before then. I hear there are talks going on from the market to the government to see if there's a way there could be a reduction in that gains tax, at least so it's not as much as 30%. It used to be at 10%, and we didn't hear a lot of noise or reaction to it. So perhaps there could be consideration seeing that this is affecting investor sentiment in the Nigerian stock market. So for yesterday, we lost 1.19% of the all share index. And there we closed at about 150,570 equity after losing more than $1 trillion. 1.31 trillion naira is what investors took out of the market yesterday. The market closed at 95,664 trillion naira. It doesn't look like it will be one of the best performing at the end of the year anymore. This is really threatening. So for the activity, it was a lot of greens, volume in green as well as value, but deals was in the red yesterday. Top trades were Fidelity, Sterling Bank, and Zenith Bank. Those are the top trades. Top gainers, NCR, Legit Internet, Cornerstone Insurance, and the top losers, CI Leasing, Transcore, and Sky Evan. They were the top losers at the close of trade yesterday. And away from the market now, the federal government has taken a significant step towards driving economic growth and development, and they're doing this with the inauguration of the Ministerial Project Approval Board and the advancement of a landmark digital transformation partnership with the Equipment Leasing Registration Authority. The Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, who inaugurated the Ministerial Project Approval Board in his office in Abuja, also presided over its first review session, considering a public-private partnership proposal from the Equipment Leasing Registration Authority to modernize Nigeria's leasing industry. The initiative aims to digitize regulatory business processes, strengthen market transparency, and expand access to equipment finance for Nigerian businesses, particularly small businesses that rely on leasing to acquire machinery, vehicles, and technology critical for growth. The minister commends the project's clarity and is stressing that the board will uphold rigorous standards for due process, value for money, and accountability. across all PPPs. And yesterday, we did have that news that Nigeria launched the sale of dual tranche Eurobond valued at $2.25 billion, joining other African issuers taking advantage of lower borrowing costs at this time. The issuance comes as the federal government shrugged off threats from U.S. President Donald Trump of potential military action in the country over alleged genocide. Money made from the Eurobond issuance is expected to be used to address the country's 2025 fiscal budget deficit and refinance existing outstanding indebtedness. Meanwhile, President Bola Tinubu has written to the House of Representatives seeking approval to borrow 1.15 trillion naira from the domestic market, and is also to fund the 2025 budget. The President, in a letter read by the Deputy Speaker Benjamin Kalu on the floor of the House, highlighted that the deficit in the budget is due to the increase by the National Assembly against the budget proposal that was submitted by the executive.
On the foregoing, I wish to request for the approval of the House of Representatives for the establishment of a 1 trillion 150 billion naira borrowing program in the domestic debt market to close the unfunded 2025 budget deficit gap.
All right, so now let's talk more about the borrowings and the Eurobond and the deficit in the budget. Among other things, we'll be doing that with Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company. Mr. Rwani, good morning and welcome to the program.
Good morning and thank you for having me.
Nigerians are getting uncomfortable again. Our Eurobond, of course, that will increase debt servicing. And then we thought the government was done with domestic borrowing since it was very aggressive at the beginning of the year. But now we see this seeking of approval for 1.15 trillion naira. I believe our budget, our debt now is about 400 trillion. Also, and that's putting a lot of fear in the mind of Nigerians. What do you see? What's your perspective to these new borrowings?
First of all, I think the approvals that are being requested now are just to ratify what is there. These are not additional debts, to be honest with you. And let us start with the Eurobond. The Eurobond, we have a maturing obligation which matured, I think, yesterday of 1 billion, and we have another maturity in another 2 months. So what the Eurobond issue is being used for, the application of the funds, is to refinance existing Eurobonds. So it does not increase our total external debt. 2, we are doing it at a time when interest rates globally are coming down. Therefore, we have an opportunity to do this. 3 is that because of the tension as a result of the U.S. threat of action in Nigeria, it is good that we do it now before anything escalates, but we do not expect any escalation. So that is on the international debt side. On the domestic debt side, it is just a ratification of the financing of the budget, because before you go into the budget for 2026, which will be announced any moment from now, you need to settle all the outstanding items. So the 1 point, whatever it is, trillion for the domestic borrowing, just a ratification of what has been there, and the deficit as this. Don't forget our budget of this year was in excess of about 54 trillion naira, and the deficit was as wide as almost 13 or 14 trillion naira. So what the president is asking for is the instruments to finance this, and you finance it by issuing of treasury bills, bonds, and other papers. So I don't think it's anything to worry about. Because our revenues have increased, because subsidies have been virtually eliminated, you'll find that the revenue available to service debt one and to pay off the debt when it is required is not in doubt. So it's not any reason to panic at all.
And since we're looking for revenue as a country that talks about selling the state-owned refineries, can that fill some of this gap or need for revenue to fund the budget?
Well, let's be clear. One thing is that the fact that your revenue is growing does not mean your debt requirements are not growing. Selling refineries is, in the balance sheet, you have an asset called a refinery, and then you are short of cash. If you sell the refinery for cash, that helps, but it doesn't change that much. Selling the refineries to whoever may want to buy them is good, because the major thing about the refineries is that they are cash guzzlers. They use all your cash. So the maintenance of the refineries has been a major issue as far as our debt management and also our expenditure management. So if we can sell them, we can sell them, it will help us. So it will reduce our amount of money we are spending on what we can call dying assets or dead assets. So I think that's the one. But it is, if we are selling them because of efficiency, not because we are revenue short or we are trying to reduce our debt.
But Mr. Wan, what are you hearing about the prospect of getting good buyers to make this refinery functional in the country? Sometimes you hear conversations around, it's too capital intensive to even get it back to an operational level, and so that's scaring away investors. But I remember I had a conversation some time ago with someone in industry and said, well, the depot owners will gladly take possession of this because they know how to manage issues around the industry.
First and foremost, these refineries are built 40, 50 years ago, if not 60 years ago. Their technology is out of date. Some of them were, some of the major decisions made, especially in Kaduna and refinery, were warped and were not efficient decisions. So I don't know who is going to buy it, because if you compare the input-output ratio, that is, if you put in 100 barrels of oil and what you get out in terms of refined products with those refineries today, and compare them with the modular refineries and the Dangote refinery today, you are not going to be able to compete. So quite frankly, I don't think of selling them. I think first and foremost, shut them down and give them out as gifts, if you may, because whoever is silly enough to buy them will know that he has to invest a lot of money to upgrade that technology to make it efficient and competitive. So, to be honest with you, selling them makes sense, and you will have to, whoever is going to buy them will have to take into consideration the cost of upgrading them to make them competitive.
But when you're saying giving them as gifts, I think that actually got me laughing. How would they give such a huge infrastructure as gifts? Then what does the country stand to gain from it?
No, I know I'm just being sarcastic, but the reality is that nobody in his right mind, right, will buy it, because if you buy it, you are going to have to spend a lot more money to upgrade it and make it competitive. It can be done, don't get me wrong, but it's going to be very, very expensive. So for us, the savings is that, let us know that it's not going to generate much. Let us know that even if we give them out as gifts or sell them at a discount to wherever it is, once we have those things producing, it's not going to, right now, it won't change much. But I want you to understand something, that clearly today, because of the Dangote refinery and its efficiencies that are happening, and today because the modular refineries are also producing diesel, and tomorrow when we sell or give them out, these refineries, Nigeria will not be an importer of refined products anymore. As a matter of fact, we are exporting products. At that point, you see it helps our currency, it helps our productivity, and it guarantees production, especially relative to the West African countries. So if people want to smuggle, they can go and smuggle it out. And that's but what we are going to have from now going on, and Dangote has made it clear that we are not going to, it's going to be producing 45 million liters a day, which is more than enough for us, and that we are not going to have any shortages or price increases for now till the end of the year. I think that's the most important thing. Whether the sale of the refineries or the purchase of the maintenance of those refineries will alter the economic destiny of Nigeria is not really relevant. The destiny of Nigeria, macroeconomic destiny of Nigeria is already determined. We are already in a path of efficiency, and we need to do so many things in so many sectors to maintain that level of efficiency. And especially at this time when we are facing these challenges, both geopolitical and economic.
So, talking about geopolitical and the threats from the US to Nigeria, how much impact do you think that has had? We've seen the Naira lose, I think that was two trading sessions ago. We saw it lost a whole 1%. Can we connect it to the Trump military action threat or the genocide allegation?
I think the political interpretation of whether the genocide attempt and all that, the point is that when your economy or your political leadership comes under a threat, investors are very wary as to what the outcome. The question is one, is it an empty threat? Is it a threat that could be carried out? And if it's carried out, what will the impact? So the market is already discounting this. We've seen the Naira lose marginally, not much, maybe about 7, 8, 9, 10 Naira. Compared to the gains the Naira had made in the past, what we are doing, we are giving back some of the gains that the Naira has made. 2, we've seen the stock market lose, and you just alluded to that a few minutes ago. Stock market has lost, about almost 2.5% in that, but it was going to lose anyway because the market was overpriced, and there was a slight correction. So we do not expect that. As a matter of fact, we expect the market to gain today, at the end of trading today. So what you do the choice you have in this situation is that, is the economy resilient and is it buoyant? In that case, whatever impact, whatever speculative attack you have on the currency, the markets and all of that will be muted, will not be that much. And now that we are raising the Eurobond issue, which I think has been underwritten, we will have those dollars to support the currency. So I expect that there will be some wobbly movement in terms of the market will factor that in. But when it is now clear that the likelihood of a military attack is very low and remote, and that what the Trump administration is doing is trying to encourage the Nigerian government to be more aggressive and more efficient in managing security within the middle belt of Nigeria. Once that is clear and Nigeria responds accordingly, which I think they will do, then the question of an attack and the economy going into a free fall will then be reduced. But definitely, anytime there's a major statement from a country as big as the United States against a country like Nigeria, the markets will not ignore it, and that's what we are seeing. But the good thing is that the amount of decline in markets and exchange rate has not been that vicious. The only thing I would point out is that, based on what has happened, the probability that the Central Bank of Nigeria will reduce rates at the next meeting is becoming slimmer, because you don't, in the middle of a storm, you don't change direction. So we might see deferral of the interest rate cut or the magnitude of the cut at the next meeting, which is in about 3 weeks from today. So that's all. I don't think we should. There's a need for investor panic at this time. Not at all. I think things. The economic destiny of Nigeria is pretty much guaranteed because of the resources that we have, because there's no madness taking place, and that generally speaking, it's the question of whether there's genocide is subject to interpretation. There is obviously need for more efficiency in managing the security, but there's no calculated attempt to exterminate Christians in Nigeria. I don't think that has ever been the case. So whatever statements are being made are probably exaggerated, but cannot be ignored. It means that Nigeria has to do more work in terms of making sure that its country is very well secured for all Nigerians, for that matter, no matter their ethnic origin or creed or what have you. So I think that is clear. The Nigerian government is aware or should be aware, and I think is really aware of this, and therefore the government will do what it has to do to ensure that everybody feels safe. It's a shame that we have to be reminded about it by external parties, but it is what it is.
All right, Mr. Ruwani. So FDC has given us the prices of commodities. We saw the drop in the price of rice. Yes. We saw that in the price of chicken and other commodities like pepper and all of that. What is it now, looking at the costs or the price of commodities especially, and now we're just how many weeks away from Christmas?
Yes, it's interesting because this is a time of the year when the harvest season is on, and we've seen some very interesting pricing development for two reasons. One, because of the harvest and increased supply. Two, because people seem to be broke. I don't need to tell you that they're spending more on petrol. They're spending 992 naira per liter. Every time you spend 992 naira per liter on petrol, you have less to buy gari and rice. So what is the impact of this on gari and rice? It's as follows. Rice is at 70,000 flat. Beans is at 65,000 flat. And tomatoes is at 70,000 flat. And compared to this time last year, those prices are slightly lower. But compared to what we think it should be doing, we think that at this time, normally the prices begin to pick up as the harvest comes to an end, begin to pick up, but we are not seeing that happen. So the good news is that because of all the macroeconomic and geopolitical tension, when we see prices decline, it means that inflation is actually beginning to come under control. And therefore, that will encourage the central bank to bring down interest rates after factoring the exogenous shock that we are facing right now. So generally speaking, I think that you are going to see prices reduce now, but when the petrol price gets kicked in, that is the difference between 841 and 992. I think that you are going to be seeing some prices begin to increase again, but not that sharply. Then December, we've seen the price of turkey is down, but the price of chicken is likely to increase because of the Christmas. There's something I must tell you about rice. The rice situation is that India recently, because of the Trump tariffs, removed the export ban they had on rice export. And the fear of many Nigerian traders who are importing rice were afraid that the new Indian rice that will come out will be much cheaper than it. So they are now selling on a fire sale basis, reducing the prices. And rice is so critical because it's a major component. People use it mainly for lunch. Some people use it even for breakfast somehow. And it has a major cross-elasticity impact because of the substitute yam, substitute beans, substitute gari. So once rice moves, all other prices of food commodities move. So if after the Indian effect or export ban effect, when we see the price of rice coming down, then we may see a rapid increase in the price of rice. So I will not be surprised if in another 2 or 3 weeks, we begin to see rice go back to 80, 85,000. Because don't forget, at this time last year, the price of rice was about 110,000. So even if you go back from 70 to 85,000, which is a major jump, such would not think it will happen, then the Christmas effect have an impact there. But I want you to note that in January, every January, no matter whether it's this year or last year or the year before, the price of rice actually drops sharply because a lot of people bought rice. A lot of people gave rice to their customers and everything in December. And once Christmas and New Year is over, you will find immediately that the price of rice will come down. So if you trend it and average it between October and January, you'll find that the price of rice this year is going to be much lower than it was in prior years.
Stock up, Mr. Ruwani, just before the warehouse gets empty. Let's stock up before Christmas. Thank you so much, Mr. Bismarck Ruwani, the Chief Executive Officer of Financial Derivatives Company.
Thank you, Ini, for having me.
Let's take a break. When we come back, we'll continue with other stories we have for you here in Business Morning. Please stay with us. Insurance is a major topic in Nigeria now, and it does seem like players in the sector will not rest until everyone has an insurance in Nigeria. So recently, insurance directors, they held their conference in Lagos, attracted the Minister of State for Finance, among other dignitaries. Senior executives and board directors from Nigeria's insurance sector are gathered here for the Insurance Directors Conference themed Navigating the New Insurance Landscape, Strategies for NIRA 2025 Compliance and Growth. The Commissioner for Insurance unveils the 3 core working groups to drive the execution of NIRA's objectives across the insurance value chain.
As regulators, I think our strategic focus on NIRA is threefold. We want to reform, we want to rebuild, and we want to recapitalize. And I will do a bit of emphasis on these 3 areas. We want to modernize regulation and align this with global standards. Trust me, this has already been delivered to us. Because NIRA is a modern legislation that has given us the necessary regulatory platform on which to propel the necessary growth that this industry requires. We want to rebuild by strengthening governance, solvency, and of course, public trust. We want the Nigerian people to trust us as the protector and the defender of the Nigerian wallet, of the Nigerian treasury, of the Nigerian assets. We want to recapitalize, not solely for the purpose of recapitalization. We want to enhance the financial capacity of the sector. We want to foster innovation, and we want to expand inclusion in the Nigerian economy.
And then the guest speaker notes that to fully harness NIRA's potential, companies must accelerate governance reforms, invest in digital distribution, and use data analytics to deepen market penetration.
Capital serves 3 fundamental purposes. Number 1, working capital. You need money to trade, to continue the business, right? Number 2, capital is also meant to finance growth. And then number 3, to serve as a shock absorber. In fact, that was what the CFI used in particular institute. Made reference to shock absorber. Alright? So capital adequacy then means that your firm has capacity to meet its maturing obligations and also absorb financial losses without impairing its operations or financial health.
For the Minister of State for Finance, improving consumer and investors' confidence is priority.
Whether you're in an urban area or you're in rural area, it does not matter. In both places, the risks that they carry are different. In the urban area, you're likely going to have a need for insuring your automobiles or insuring your house against fire. Now, in the rural community, the same risk or different set of risks depending on what you're facing. Some people are facing increased climate action from maybe flooding or drought, maybe their farmlands. So it depends on what sort of risk that they are facing. But in all of it, the underlying tone is really increasing consumer confidence. Insurance just means that you have to protect against risk. Risk will happen. There must always be risk. Risk is part of life. But then your ability to manage the risk is what we call insurance.
As the reform clock ticks, the insurance directors have set a clear agenda. Compliance is top for growth and transformation in the new era. Well, talking about the new era there, it's also about artificial intelligence technology, information communication technology. That's all it's all about. And that's the new era in the world now. At University of Lagos, they have an arm that's concentrating on that and how to take the talks to works and get infrastructural development for AI-driven activities. Machine Intelligence Research Group of the University of Lagos is discussing building sustainable AI-driven transformation infrastructures for African economies as a theme for their 5th edition.
Can take 2 more questions.
Attendees are beyond students of the University of Lagos to include individuals who are already very active in the AI space in Nigeria, but the target is to empower more people to get active in this space.
We are not just talking about AI, we are defining what AI means for Africa. We are charting a path where technology aligns with our values, cultures, development, and our priorities. We're exploring how AI can enhance education, agriculture, security, governance, and creative industries, while at the same time ensuring that our innovations are ethical and inclusive and resilient.
The University of Lagos says this is beyond talks and they take it to practicals.
By the end of this month, we will be launching the world-class AI lab at what we call the Unipod, donated by United Nations Development Programs. We are committed to raising the standard in educating, in empowering, in also improving the level of AI deployment in Africa. Beyond that, University of Lagos has around 8 ops. And out of these 8 ops, 6 of them are devoted to promoting artificial intelligence and robotics. And like the HOD mentioned at that time, our deliberate attempts to create a faculty for computing and informatics is purposely to build a unit that will not only use technology, but also become a developer of this technology that African-oriented and also it is indigenous to our challenges, so that we can build technologies that are driven by our passion, by our problems, such that the solution that will be developed will address our local opportunities.
With the backing of the state government, funds may not be a challenge.
It was the governor's commitment to release about $1 billion last year for continued work in research and development. We hope to also double that next year to continue to fund AI-related research and development. Why are we doing this? To enable the pipeline of homegrown solutions in Lagos State, because we think that the problems we have here are going to be solved by the people that are here. And so we have put our money where our mouth is to drive research and development. And of course, that fund also helps with commercialization and entrepreneurial development.
The organizers hope that by the 6th edition, there will be structures to represent the promises and plans made this year. Let's take that conversation on AI and infrastructure further. Here in the studio, we have Toby Olabajo. He's the founder of Principle, and he's interested in digital culture in Africa and more specifically in Nigeria. Toby, good morning and welcome to the program.
Good morning.
So AI is taking over the world. I don't think anybody would argue with that. It's now been accepted. But you are more interested in the digital culture in Nigeria. When you say digital culture, what do you mean exactly?
So our culture as Africans and Nigerians is very rich, right? So one of the things we have realized is that because of the way the world is, right, people are trying to modernize too fast and too much. So we are, like at Fixable, we realize that our names are very rich, right? So like Oluwatobloba is richer than Walter, for instance. Apologies to any Walter out there, but so basically, so we launched something called, because we're a platform that makes it easy for people to frame their pictures. So we launched something called name frames. So people, and it got really popular, people are framing their names, their local names, Chinedu, Izuchukwu, and so we are merging technology and digital culture together. Our culture as Africans is very rich, but we realize that most people are trying to deviate from it. Most people are trying to shy away from what makes us us, you understand?
So why should I be interested in this?
why should you be interested in it?
Exactly. Why should I be interested in what's framing my name or going? I mean, let me use the technology and make some money, for crying out loud.
Yeah. So, but many of our names, some people, because of the way we are presently, right? Some people don't know the meaning of their names. Like, if you ask an average person what is Ichuku mean, for instance, they may not know, but it's truly to know that your name is richer. Like, Chinedu means God leads me. Chinedu, you understand? So seeing that every day on your walls can just be inspiring, and that's what we have realized, right? That's what we have seen. People are so excited about it, and then
so is it just name African? No. The digitalizing of our culture, is it just in the name that you're looking at?
Art as well, right? We realize so technology has made these things, has merged these things together. In the past, when people want to listen to music, they have to listen to our music, they have to go to the theater and things like that. But now we have so many streaming apps that allows us to also stream that, right? So it's just the way the world is going right now. These things are getting intertwined, right? So Pixible is focused on helping people to achieve those things, right? Arts are very rich. There's something called Ofu. Someone framed Ofu with us. I don't know if you know what Ofu is. But basically, just see those things in your walls can be very chilling. And then that's what we have realized.
So what's the role of creative technology in preserving our African identity?
Yeah, the role is significant, right? Because, like I said earlier, right, things are getting, there's literally no gap anymore, right? Things are getting intertwined. So the role is significant, and yeah.
Okay, and then how much challenge does infrastructural development? We had there in Unilag, they're talking about, first, the Lagos State government has promised them, I think, about 2 billion for infrastructural development. How much challenge do we have in progressing when we look at the gap, infrastructural development?
We have a lot of challenges because so many things, we have to build them from scratch, right? But it also offers an opportunity for us to innovate as a country and a continent, right? But there are a lot of challenges in terms of logistics, in terms of so many of those infrastructure has not been built, right? But it also offers an opportunity for us to think and come up with innovative solutions to do those things, right? So one of the things we're also working on at Pixible is something called augmented reality, which brings what you have, like the pictures on your walls, to life, right? So in terms of the challenges that we face as a continent, as a culture, they're enormous, but it also offers us an opportunity for us to think and innovate and come up with better solutions, right? Jeff Bezos said one of the reasons he built Amazon to be this big was because they had the American Post Service. We don't have that in Nigeria. Our post service is not as efficient, but it also allows us to build like a very beautiful and innovative logistics system.
So even you have said it, that the gap also creates opportunities. Yeah. Would you say the youth in Nigeria are looking that way, or we're looking at, it's a negative, we can't do anything? Would you say generally the mindset of the youth, as AI and technology is coming up and we see new softwares helping us to make our job easier, would you say the youth are taking advantage of these opportunities?
Yes, we are. There are lots of really bright minds out there, right? So when you see what people are doing, you'll be shocked, right? A guy came to Nigeria recently, I think was working on bees, like something related to crypto and all these things, right? So we have very, very bright people, but because of how it is, right, it's concentrated in certain places, right? So
where is it concentrated?
You most likely find them in Lagos, but they're everywhere. They're everywhere in Nigeria. But basically, they are concentrated in certain places. Like you will find really smart people around. When you use Twitter a lot or X, right, you will see brilliant conversations. You'll be shocked that these Nigerians. And also when you check the people working in very big companies, you'll see that there are very really smart Nigerians that are working there, right? So the brain capacity is there, but we need more, obviously. We need more. We're a population of over maybe 150 million or 180 million people. So the percentage is way lesser than it should be. So some of the things we can do is to come up with, and one of the things I've always thought about is that as more young people succeed, right, it inspires others to also pursue that path, you understand? So if we build Pixible to be a very successful company, for instance, it inspires others to know, okay, there's a technology company that is doing these nice things, right? I can also do things like that. So I think also having mentors, also having really smart mentors that are also young, that are also inspires the youth to also pick up on this, because that's what helps America, you understand, helps the US, right? When you see like a Zuckerberg building Facebook, it also motivates you to also do something similar. So I think people succeeding helps other people succeed, you understand? So
how much is funding a challenge? Because some people say it's not about funding, it's more about the ideas. If you have the ideas, it will attract the funding. And we saw startups on the continent. You know how much, about more than 440 million in 1 month in October alone. So they say money is not the issue, it's the ideas and the patience to follow through.
In Nigeria, money is definitely an issue. Maybe in foreign countries, but in Nigeria, getting funding is definitely going to be an issue, especially because investors, look at what investors are looking for. Nigeria is a low-trust society, so investors want to see that this product you have built or this product you are building, can it gain traction? Can it become big? You understand? Before they give you money. So the ideas is tied to it because, I mean, if you're able to communicate efficiently that this thing we are building is going to do really well, right? They will give you money, right? So, because everybody wants to win. That's my favorite philosophy. Everybody wants to win. So when you can communicate that fully, that, oh, this thing you are building, there is a lot of value that's going to be accrued back to them, they definitely give you their money. But it's still a challenge, definitely.
Would you say the reforms, the President Bola Tinubu's administration-led reforms, are they helping matters? Or things are still the way it used to be?
I think they are getting better. I think the president... I'm not very political, but I think the president
What area has gotten better?
The Minister of Technology, that is Bosun Tijani, is a startup guy, you understand? So I have so much faith in him. I think he's the CEO of CCO at the time. So I have so much faith in the fact that we'll come up with brilliant things. I think he's focused on the postal service, and I've seen a few things, but I don't want to pick anything specific. But I think we trust in the president to obviously deliver great things for us.
For you as a youth and a CEO in the country, how much impact has government policy helped you to get to where you are, or how much is it driving your vision, for your future in your company?
I'll say since this administration got into power, right, the dollar, even though at some point it was going really high, but I think it has stabilized. Even though it's still very high, it has stabilized. So that allows us as business owners to plan, right? Because some of the things we pay for our server space, they're foreign, you understand? So we use dollars to pay for those things. So the dollar, even though it's still high, but at least it's a bit stable. So you can plan, you can say, we're putting this amount of money this year for these expenses. Unlike the past where you could just wake up and then there's a 400 naira increase like that. So I think that's one of the things that the CBN and this government, this administration has gotten right. The fact that the naira is a bit stable, right? At least it's not that hiccup that we used to have before. It's not happening anymore.
Would you say all of this has reduced the trend or the number of people who desire to japa? Or it's still there?
I think it's still there. I think desire to japa is the desire for better opportunities, right?
Yeah. We can't have better opportunities in Nigeria.
We can, but it's just
but it's a long way down the pipeline.
Some people feel like, oh, I'm getting old, I need to, you understand? So it also has to do a lot with ambition, right? The more ambitious you are, the more you feel like you deserve good things, right? And frankly, we are getting there, but there are a lot of ways we are not there yet as a society. So I think but I think the rate of the dollar and the way how things are expensive have reduced it, right? Unlike when you wake up, like maybe like 3 months, like last year, you just open Twitter and you see one person say new dispensation. So I think it has reduced a bit.
You have a japa plan?
No, me presently, no.
Because you're already a CEO.
Yeah, I'm here to build. Because when we built our factory, when we built the Pixible factory, a lot of people were asking, why didn't you just use that money and just go to Canada or something? I say, no, I believe we could, because if everybody keeps living, right, then, because when you leave, if I move to America, for instance, I get married there, my children will most likely not know Nigeria anymore, you get. So things like that. So some of us need to still stay and then try to build this nation to what we want it to be. So, yeah.
All right. Thank you for staying.
Thank you very much.
And we hope you won't change your mind.
I hope so too.
Thank you so much. Toby Olabajo is the founder of Peaceable. Thank you.
Thank you very much.
Well done. Let's take a break now. When we come back, we'll head to the foreign scene. Please stay with us. Let's go global now, starting from the Bank of England, which is set to make its last interest rate decision before the autumn budget later this month, with economists saying that although the central bank is more likely to hold rates steady, it's not a given. Economists have forecast for the most part that a majority of the BOE's 9-member Monetary Policy Committee will vote to keep its key interest rate. In any case, there's a general consensus that the rate setters could trim rates as soon as December and will cut again over the coming year in response to expected cooling inflation, the rate of which remained unchanged for the third consecutive month in September at 3.8%, and a softening of labor market data. The United States Supreme Court on Wednesday heard a case on the Trump administration's reciprocal tariffs, and both liberal and conservative judges appeared skeptical of the legal basis of those tariffs. Following the hearing, traders on the prediction market, holy market, think that there's only a 26% chance that Trump's tariff will hold, down from roughly 50% a day ago. Markets rose after the hearing, with major U.S. indexes rebounding from Tuesday's losses. Still, the end of tariffs wouldn't be an unequivocal win for stocks if the Supreme Court compels the White House to refund billions in collected duties, a move that Wolf Research says it doesn't seem much of a legal argument for. It would mar the U.S. government further in debt. In turn, Treasury yields are likely to rise, as they already did on Wednesday, which could put pressure on stocks. Meanwhile, Trump could invoke other executive powers to reinstate his tariffs, causing further unpredictability for businesses and markets. And still in the U.S., Transportation Secretary Sean Duffy has announced that he will be reducing flight capacity by 10% at 40 major airports starting from Friday, and that's affecting roughly 3,500 to 4,000 flights daily. It's not immediately clear which airports would be affected. And the disclosures also raised concerns about already thin staffing among air traffic controllers, and insufficient staffing at some FAA facilities has disrupted some flights even before now, since October the 1st. In Vietnam, exports fell in October from a month earlier, with shipments to the United States dropping faster as the trade-reliant country adapts to American tariffs. The Southeast Asian nation is still in talks with Washington over a possible trade deal. In August, President Donald Trump imposed 20% tariffs on American imports of Vietnamese goods in a bid to reduce the U.S. sizable trade deficit with Vietnam. The duties have slowed Vietnamese exports to the U.S., its largest foreign market, but the trade imbalance remains. For the first time, 10 months of the year, Vietnam has reduced a $111 billion trade surplus with the U.S., pointing to another potential annual record. This is according to Vietnamese data, which is usually more conservative than U.S. figures. The U.S. is not releasing trade data due to the ongoing shutdown of governments. And Microsoft is giving employees a way to raise concerns about the uses of its technology after controversy emerged over the company's work in the Middle East. An internal portal for Microsoft 200,000 plus workers now includes an option to request a trusted technology review, according to Brad Smith, the company's president. He wrote in a memo that was disclosed in a securities filing on Wednesday. It's designed for bringing up misgivings about the ways Microsoft builds and uses technology. The move comes weeks after Microsoft stopped providing some services to an Israeli defense unit. In August, The Guardian said that Israeli Defense Forces Unit 8200 had built a system in Microsoft's Azure cloud for tracking Palestinians' phone calls as part of the country's invasion of Gaza. Robinhood beat Wall Street expectations for the third quarter on Wednesday, extending a hot streak that has made it one of the biggest large-cap U.S. tech stocks this year. The results here shows that earnings per share was at 61 cents. That's against 53 cents that was expected Revenue hit $1.27 billion against $1.19 billion that was expected. Revenue doubled year over year, while the net income climbed to $556 million for that 61 cents per share. And that's up significantly from the same quarter last year when the company posted net income of $150 million. Transaction-based revenue, which is a proxy for trading activity, came in at $730 million. And DHL Group's free cash flow surged 80.8% to 1.2 billion euros in the third quarter as the German logistics company generated higher profits while reducing capital expenditure amid volatile trade conditions. Operating profit increased 7.6% to 1.5 billion euro, despite revenue declining by 2.3% to 20.1 billion euro, driven by currency effects and lower volumes en route to the United States. That's all the global news we have for now, and that's it on Business Morning also. Thank you so much for being a part of this 55 minutes journey into the world of business. I'll be back at 1:30 with updates from the world of business. I'm John Meko, and I'll talk to you then.